Hi everyone, Donnie Schultz, Embrace Home Loans here with a market update, really a market wrap. It's 7:45 on Thursday, August 11th. Coming off of an eventful week, a lot of rate volatility like we've been used to, and I just wanted to go through what happened this week. So in previous updates, we talked about potentially seeing a peak in inflation, a peak in interest rates back in mid-June. We did get a higher inflation report in July, but that was reporting June numbers. This week, we saw the first inflation data coming out that was going into that downtrend that markets were expecting. And inflation came out a lot softer than expected with the CPI data yesterday. That was also confirmed this morning with producer prices data. So as of right now, it looks like inflation has peaked. Inflation is starting to come down, but like we've been talking about, one report isn't going to drive rates back lower. It's not going to spell a defeat of inflation. Markets are going to want to see multiple months of lower inflation data before this is confirmed, and then rates should start pushing lower. So we had softer than expected inflation data yesterday. We would expect rates to rally, rates to move lower. They didn't. We actually are moving back up in the channel that has been established as markets go through and digest economic data that comes out. Last Friday, we had a much stronger than expected jobs report. So right now, the data is very mixed. Even though inflation was lower, GDP was a second consecutive negative print, which is an indicator of recession. The jobs portion of the economy is still very strong. We're adding jobs, wage growth is up. So markets have some question marks, right? If jobs are strong, if unemployment is historically low, if wages are growing, are we really curbing consumer spending where we would expect inflation to come down dramatically, or is inflation going to top off and just kind of hover at these levels and prices are going to remain inflated? That is yet to be seen, and that's what rate markets are showing us. I don't think that the 10-year Treasury, I don't think mortgage-backed securities are going to pick a side here. I think that we are going to be range-bound. I think there's going to be a lot of volatility. I think it will be subject to economic data, data that might necessarily be a good thing for rates historically, like lower than expected CPI report yesterday isn't necessarily correlating to lower rates. So buyers need to be super defensive. There's definitely opportunity. Right now, I think we're coming up to the top of the channel. If we look at this 10-year Treasury here, there's a 3-month view. We have, as this moves higher, rates move higher. As this moves lower, rates move lower. We have that peak back in mid-June. 30-year fixed rates 6.125, 6.25. We've come down significantly from that peak. We bottomed out back beginning of August. A lot of rates in the high fours at that point. Now we're moving back higher in this channel. Top of the channel is probably this red line here. That's the 50-day moving average on the 10-year Treasury. It's at 2.96. Could test 3.0. And then what we would anticipate is that rates will start moving back lower. And the target would probably be this low here that we saw on August 2nd, which was 2.52. We get down to 2.52, I expect it to start moving back higher to 3.0. The thing with buyers is that we can't just rely on that type of pattern. We don't want to get caught at the top of the range coming up here, and then all of a sudden economic data comes out that pushes us back up to the June highs, and we start seeing rates in the mid to high fives again. That's definitely possible. So buyers have to be defensive. We want to make sure that we're protecting them. We want to be taking advantage of locks. It does look like inflation has peaked out here, and what I would anticipate is for us to be in this 4.875 to 5.25 range on rates moving forward through the end of this year as the market digests what's going on with inflation. Is it actually continuing to move lower? Is it going to stabilize? Is it going to go back higher? It's always possible as well. And then also things like jobs data, right? A lot of market participants are saying that maybe the report last Friday that was very, very strong is an outlier, and we need to see what happens next month. But these things are going to take time to play out. We are putting our buyers in the best position possible with our Approved to Move Plus program with value guarantee. We have our Prime Plus program, which is undercutting markets by about 0.5% in interest rates for borrowers putting down 10% or more, $400,000 loan amounts up to $3 million. Any questions, you can reach out to my team anytime. Hope everybody has a great weekend. Talk to you soon.